Hi folks, it's the Peeps Prophet again, and I would like to show you a quick rundown on the CPI direction today on the Euro USD, and let's head straight to the chart. Okay, yeah. So basically today being Tuesday, 13th day of May. We anticipated a bearish DXY, that's a dollar index, and then a bullish Euro USD, and of course, that was exactly what happened. Okay, yeah, so let's head on to the higher time frame and see the market clearly. All right, beautiful. Now, this is the dollar index, and remember, I told you guys earlier on that right now this is my trend line, and we could see a very strong rejection right here immediately after the sweep on the liquidity pool right here below this equal lows. Right, look at the resistance right here. Look at how the market rejected at this point, a very strong weak rejection. Okay, that's an indication that we are going to be going up. That's bullish, buying the dollar index. Okay, and of course we'll be doing the opposite on the Euro USD. We are looking to sell the Euro USD long term, okay, into 50% of this region. All right, this is a very key region for me because this is the equilibrium from this dealing range, the low here, to this high. This is 50%, okay, of my weekly equilibrium. Okay, and then you could see that there's a high here which have a fair value gap right above it. Okay, and it confluence with the OTE zone, all right, weekly zone, which is a very high point, a very sensitive point that I'm looking to see price trade into, okay, long term. But then we ain't just gonna say price is going to continue buying straight up. Remember, market structure, price what distributes, retests, move in an impulsive and then retesting manner. Okay, so this is the higher time frame. So if you are trading lower objective with the information of the higher time frame, you need to pay attention to the directional bias and what you're actually looking to see. All right, now that we know where the market is actually going from this point, okay, it's actually going bullish, of which we will be selling the Euro USD from this point of rejection. Okay, so I spotted a sell to buy, okay, a sell on the dollar index, which means a buy on Euro USD to sell long term, okay, and a sell to buy on dollar index. You could see I wrote that earlier today. Okay, now let's head on to the Euro USD and see what we have. Okay, now on the weekly time frame, it's the inverse of what we have on the dollar index. Okay, this was my trend line, the trend line I delineated on the weekly time frame, and you could see that the market broke the trend line, came back into the trend line and rejected right at this trend line. And we also have a confluence here. The trend line is at a bullish breaker of the weekly time frame, and at the same time we have our 50% range from this range low here to this high. So we have about 3 confluences, and price got into our OTE region, okay, our ultimate trade entry region, right here at the 50% right here. So we have a very strong reason to see a rejection to the upside, okay, to balance up, okay, into this volume imbalance, this weekly volume imbalance here, which I outlined. And you could see that price sold into that point, OTE point, all right, and what, pull up back into the volume imbalance, okay, of the weekly time frame. Let's go a bit lower so that you can see clearly what I'm saying. Beautiful. So you could see this was the buy candle right here. price rejected at OT and right here into the volume imbalance zone. What do you see here? You're beginning to see a rejection right here because price has tapped into the OTE region, so I'm expected to see a sell. So this now becomes a draw on liquidity. What's the target? The target is for price to sell off Euro USD into the zone, this zone. Why? Because this zone was the bullish order block that triggered the break of structure on the higher time frame. Right, let's go back to the weekly so you can see that clearly. Yeah, beautiful. So you can see that we have a bullish order block right here, and this was the bullish order block that's enhanced or propelled the distribution that broke the structure here, okay, on the higher time frame. So that is very, very sensitive. We cannot ignore that. Okay, so this bullish order block, it's very sensitive. That was why we highlighted it right here and also it confluence with our equilibrium, weekly equilibrium, 50% of the region, right? Okay, it's right within the zone. Okay, we also have a fair value gap right into this other block, so it's a very strong point. I'm looking to see price trade into long term. Okay, sell off into the zone, all right, and ultimately into the zone, because I could also see very strong I can see some very strong points here, institutional reference points here. You can see the IOFED. Okay, I'll do a video on that explaining. All right, now I can see an IOFED right here, and also a pool of liquidity here and a fair value gap below it. So very, 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 very clean and numerous confluences here to get a rejection. Okay, so we hope to see price pull back into below this region, okay, this discount region, which have a lot of institutional reference points to respect before we continue to the upside, going bullish. Okay, so all right, so for me, May, June, July, I'll be anticipating to sell the Euro USD, okay, to go bearish. All right, yeah, where while I know and I'm sure that most of the retail traders will want to keep buying, I'll rather do the sell, right, until price gets to this objective. Okay, minimum should be this bullish order block here, all right, for you to start thinking of pulling up or going the opposite direction. Yeah, the buy. All right, so that is basically what we spotted today. So basically it was on the Euro USD, it was a sell, it was a buy rather. Okay, it was a buy into, we bought into this region. Oh, mind you, I didn't take a trade. Okay, I didn't take the trade because it wasn't my time. That is what discipline does in the trading game. Okay, even when you know where price is going to reach out for, you don't take trades, except it's the time when you're supposed to take it, and then you have everything in check, okay, before, in line with your strategy and time, because trading is first time and then price. Okay, so you want everything in your box checked before you take any trade. Okay, so for me, if you ask me, I like to say this is Tuesday, and then we've seen a lot of distribution and consolidation. Now price tested, okay, into covering this liquidity void right here. Okay, this is already at the premium level, premium array. Okay, so I want to consider this as a mitigation block. As far as I'm concerned, this is the 1 hour time frame. I remember I told you guys I take trades on Tuesday, and also I use the higher time frame to do analysis and then take my trades minimum on the 1 hour time frame. And right now we are on the 1 hour time frame, and you could see clearly that the market is going bearish from this point. So I want to consider this move right here as a mitigation block. Okay, you could see a failure swing right here that gapped a vacuum right here, gave a vacuum gap and then retested back into it. So I want to see it's forming like an M pattern, which this high now failed to clear out this high. So I consider this as a mitigation block. now a break of structure right here at this point. This was already a key region on the higher time frame, which has been violated. So now it becomes a roof. It has become a what? A resistance here. Okay, so support turned resistance because it has been broken. Okay, so for me now, and this is a liquidity void which has been traded into, so this is a strong point of resistance as far as I'm concerned, and I'm hoping to see price slide down into this, looking at all of this as a liquidity, okay, as a liquidity point right here. Remember, there's a fair value gap right below this liquidity pool. Okay, so whereas the retailers will see this as W pattern, a break, and they'll be waiting for a retest somewhere around this fair value gap right here. But as far as I'm concerned, the higher time frame dominates the lower time frame, so this is not what I'm looking for to be buying right here. Okay, so this might just be a trick, an inducement, right, to take out the retailers, right, so that the institution can distribute price to the lower side, taking out liquidity from the opposing side and then continue distributing to the lower side. Okay, so that is my anticipation following Tuesday, Wednesday, and let's see how it goes. If it distributes down, clears out liquidity right here, then we might see a consolidation following the Thursday, Friday, right? Yeah, the Friday New York session, and then Thursday New York session, and also Friday. All right, so let's see. I'm in the trade right now, so I took my trade right here at this point of resistance, rejection right here. Now you could see that price is trading lower. Okay, so let's see what's gonna happen, and I'll keep you updated. Let's see what happens. Let's see if this trade is gonna give us what we are anticipating. Remember, no analysis is perfect, and no market is always, no matter how good you are, it's based on probabilities. But the best way to win is to trade less. I always tell you, okay, I take only one trade in a week, and for quite a long time it has been profitable because I tend to see the market clearly and then catch the best move for the week, and I'm good. Okay, like for this week now, I'm targeting to catch, I'm risking just 12 pips. You could see 12.2 pips, and my target is 91.4 pips. That's good. That's more like that's a 7.5, yeah, approximately 7.49. That's approximately 7.5 risk to reward ratio. That's crazy, guys. Okay, that's enough for you to make whatever you want to make. Let's do a little calculation. If you're using 0.20 lot size and you're trading 92 pips, automatically you are making on Euro USD, you are making $184. Okay, so it depends on your equity. If you are using a higher equity, you could up the lot size, and then you could see that your risk to reward, it's quite encouraging, and it's something you will want to risk. Okay, you're not risking too much. All right, so our basic, we are positioning ourselves for this trade. Remember, I take my trade after the New York session, okay, during the late New York session, and sometimes even after the late New York session. Okay, I allowed the market, the trick is I allowed the market to do all that it wants to do, and I take the real move in between during the midweek and run with it. Okay, to maybe Thursday London session or New York session. Once I get my target for the week, off I go. Okay, I don't care what happens on Friday. Okay, because most times Friday it's not really good to trade. Monday, Fridays, you want to stay away from the chart most of the time. Okay, so that's my anticipation for the rest of the week, and I'll keep you updated. See you guys tomorrow. If this plays out, fine, we've gotten our trade for the week. If it fails, if it goes against us, then we look for another entry tomorrow, being Thursday, and we run it for the week. Okay, Thursday, Friday sell. Okay, and then that's it, guys. Okay, cheers and God bless you. I wish you good luck and good trading. Cheers and bye for now.